The Mindtree put out strong financial growth. The dollar revenue, is it on track to improve? And what is the outlook for FY19? To understand all of that and lots more is Rostow Ravanan, who is the Managing Director and CEO at Mindtree. Good morning and lovely to have you with us on ET Now. Thank you so much for taking the time out. To begin with, let's start off by talking a little bit about the client budgets. What is the commentary at the start of this year?
Good morning. I'm always happy to be on ET Now. Feedback from majority of our clients who have completed their planning cycles is very, very positive. I think they are continuing to use technology both to drive efficiency within their business and also to grow their business. So both pieces, there's I think a very strong investment behind technology. Some of the global headwinds from a macroeconomic point of view, some of the global risks that were holding their spend back, their investments back, seem to have reduced a little bit. And I think overall our clients are very positive about their business, and consequently their investments in technology are likely to grow, which means FY19 will be a very strong year for Mindtree.
Okay, so you're clearly exuding a lot of optimism and confidence, just like you did in your conference call. Let's talk a little bit about execution this quarter. Do you think that you can retain the similar growth expectations as Q3? And do you think in light of that, dollar revenue growth at around 3 to 4% would comfortably be clocked?
I'm not giving guidance for the quarter, like you know, but we did indicate that Q4 is also likely to be a good quarter for Mindtree. Similar growth rates as what we did in Q3. And if we continue to make good headway on all the initiatives that we have underway, it should also lead to stable to maybe slightly improving margins from Q3 to Q4 as well. So very, very positive on it. And the picture seems to be along the same lines as what we saw in the beginning of the quarter.
So Rostow, give us some more details on this. What kind of traction are you seeing across verticals where you have competencies, insurance, travel, retail, CPG as well as technology? And is it the best that you've had in a year, and will Europe growth lead versus US?
We are very, very excited about the opportunities in front of us. If you look at pipeline, for example, it's been an all-time high in the history of Mindtree. If you look at our win ratios are continuously increasing from where we were. In December 2016, our win ratio is approximately 21 or 22%. Today it has become 33, 34%. So growing pipeline, improving win ratios, both spell a lot of great traction for us with our customers. So overall, very positive. I think we're seeing some differences in the nuances between verticals. Predominantly customer-facing businesses like travel, CPG, etc., are making huge investments in digital, and some of the work we are doing with our customers in that industry is absolutely path-breaking. Things that nobody in the industry has ever done before are being attempted by our clients, and we are walking lockstep with them on those journeys. Within financial services, I think currently we are seeing a lot more traction in the run the business kind of work. I think that industry, or at least our clients in that industry, still seem to be more oriented towards cost optimization, efficiency improvement, improving quality, reliability, etc. So more of our portfolio within BFSI at this point of time is reflecting in our run the business kind of work. From a geography perspective, at this point of time, I think for the last 1 or 2 quarters, our business in US was doing extremely well. Europe was not bad, Europe was decent, but the US business was doing quite well. At this point of time, I think even for Q4, our growth in the US will be higher than our growth in Europe, but you never know. Things could still surprise us in the next couple of weeks left to close this quarter. But overall, I think both are seeing good momentum.
Okay, so give me numbers then. Since you're saying the deal pipeline is looking strong, what are the conversion rates? Because we sense that they're improving, digital contracts are becoming much larger. Give me numbers on how all these parameters stack up.
Like I said, our win ratios are going up. For example, our pipeline is almost, I would say, 50-60% higher in December 2017 compared to what it was in 2016 December. So in the last 1 year, pipeline has grown significantly. Our win ratio has gone up from about 21-22% in December 2016 to about 33-34% in December 2017. All of which, like I said, indicate that our customers are very confident in their business, but also they are continuously seeing our strategy of focus, of expertise-led positioning, the talent that we have built, resonating with their own expectations. So the customer's perception of Mindtree has also dramatically improved. That also, spells very positive tides for us going forward.
Okay. Let's also understand what the outlook is in terms of the automation, machine learning, AI. Those are all new factors which are leading to lower headcount addition across the IT sector. What is the hiring plan and the probable wage hike for the coming year?
The wage hike number is not frozen as yet. I was reviewing that with our teams, both finance and HR, a couple of days ago. I think we're still waiting for 1 or 2 more assumptions to be clear. I think by the time we announce our results in April, I think that picture will be clear. But in terms of hiring, I think we'll probably look at somewhere between 1,500 to 2,000 campus additions next year. So it will be larger than what we did this year. This year, I think we did about 1,200 to 1,300. So next year, our campus addition will be significantly larger. Lateral additions will obviously be to both backfill attrition and also to fuel more growth. But overall, at least from a Mindtree perspective, I think we are very, very positive that the trends like AI, automation, etc., are nowhere close to the sort of like the doom and gloom scenario that is being painted that lead to job losses or anything or the other. I think it is a massive skilling opportunity for our people to learn new skills. And once they pick the skills relevant to today's marketplace, there's a tremendous amount of opportunity for growth for all of us in this industry at a personal level. So we actually are seeing both revenue growth and headcount growth in our own business.
All of this prepares you for double-digit revenue growth in FY19, and the street seems to be penciling in 11 to 12%. Do you think you could see a number close to this or a number in the mid-teens when it comes to digital growth? Because a lot of other IT companies and your peers really seem to be fairly upbeat on the prospects of digital. What's the future like here?
I think digital is an absolute sweet spot for us. We made a lot of investments. We are very focused on it. We have delivered some, like I said, path-breaking kind of impact for our customers, which nobody in their industry has ever done before. So if you look at March 2017, our most recent financial year, digital grew twice of Mindtree. So I think that kind of a trend where digital will be a high growth engine for us will continue over the next 2 or 3 years. In all likelihood, the growth rate in digital will probably accelerate because like you pointed out, today customers are making much bigger bets on digital than we saw a year ago or 2 years ago. And Mindtree is considered as the anchor partner or choice for some of those kind of programs. So I think digital will continue to maintain a very strong growth momentum. Obviously, like I said, since I don't give guidance, I won't comment on the specific number, whether it will be X or Y. But thematically, Mindtree will grow faster than the industry and digital will grow faster than Mindtree within that portfolio.
Wow, that's encouraging to know. A sweet spot for the company, and you really seem to be echoing what a lot of your peers are talking about as well when it comes to digital. So while you're not divulging details, we're reading in between the lines. It's going to be fairly strong growth. Now, Rostow, I want to also understand what are your organic growth plans. Are you, looking? We've really digested Bluefin and Magnet in the last 2 years. Is that going to really be, strong growth drivers as well? Are you ready for inorganic growth plans as well?
We continue to look at options for inorganic growth, but at this point of time, I don't think we have come across anything that matches our expectations from a culture, strategy, economics, etc. point of view. So at this point of time, no inorganic opportunities on the radar screen. At this point of time, primary focus is to grow the business organically. Many parts of our portfolio are reasonably strong in their respective segments, not seeing any gaps, and wherever there are gaps, enormous amount of opportunity for us to solve that organically. So at this point of time, I would say 100% focus on organic growth.
I know you're not really divulging details, but when it comes to your margins, are Bluefin and Magnet 360 on a path for EBITDA positive run from here? Will offshore on-site mix and the higher local hiring in the US weigh down, or can we see mid-teen EBITDA margins next year?
There are two parts to your question. Commenting first on the Bluefin and Magnet business. We've done a lot of work jointly with those teams to help bring stability, help get the revenue traction, help explain it in terms of better to our customers, reposition those businesses wherever that was needed. So a lot of work has happened. I think the strategy was always clear, the strategy was always relevant, but the missteps were on execution, and we've done a lot of effort to fix that. And both those businesses have responded really well over the last 1 or 2 quarters, and at this point of time, very positive outlook on the revenue momentum in both. Whether I look at pipeline, whether I look at deal sizes, whether I look at win ratios, whether I look at customer impact, customer feedback, on all of those parameters that we track as operational managers, I think that business is looking quite positive. Overall, from a margin perspective, we continue to believe that at this point of time, Mindtree still is below our own comfort level on margins. We still need to do a lot more work. This year has begun to see some benefits. We started the year with about 11% EBITDA in Q1, ended December with about 15% EBITDA. But I think we do have to do a little bit more work to get margins to our own comfort level, and it may take us a year or so. But the entire management team is very strongly focused on that.
We wish you all the very best. Thank you for taking time out and joining in. And of course, I would like to add that we enjoyed thoroughly some of the commentary that you had at the ET Women's Conclave as well at the summit. And thank you for taking time out and joining in. Fairly positive commentary there coming in from Rostow Ravanan talking about Mindtree. They're looking at a strong year for FY19. The BFS clients, he says, are making more investments and they've been growing better in the US, and clearly talking about how the deal pipeline is at a lifetime high. Digital is a sweet spot. So seems like on pretty much all parameters, it's a thumbs up for Mindtree.